Canada's economy is on a hot streak. The latest data from Statistics Canada shows our country added 60,000 jobs in June, the largest such increase since January. But with strong economic growth comes growing inflation, and the Bank of Canada is once again set to raise its key interest rate. Joining us to talk about what this will mean for your wallet is personal finance expert Rubina Ahmed. Rubina, thanks so much for joining us.
Thanks so much for having me.
Let's start with homeowners. Canadians who own property are no stranger to interest rate hikes. What could this week's potential rise mean for monthly payments, and how can people prepare for it?
Yeah, so it's going to mean money is getting more expensive. So if they raise rates with what forecasters are expecting by 25 basis points, the overnight rate will be at 5%. And we haven't been there since 2001. So for most people who own a home today, they've never experienced this interest rate environment. And so it is something that they have to relearn how to manage their personal finances, manage these increased payments on their variable rate mortgage. How can they do to prepare? Definitely don't take out more debt, especially that variable interest rate debt that's in their home equity line of credit. Because money is going to get more expensive if Bank of Canada does raise rates later this week.
Okay, let's talk about prospective homebuyers then. In your opinion, is now a good time to start looking at buying?
So it's always a good time to look at buying if now is the time that you need a house. And I think we get really bogged down in the numbers sometimes, looking at what home prices were, what interest rates were, how much we could have afforded a year ago. The reality is you have to deal with the market that you are in. Definitely when you are purchasing your home, especially your first home, because that is probably when you are going to be in the most amount of debt in your life. Because when you sell your first home and buy maybe buy a larger home, you have much more equity to put down. You really have to do the numbers to make sure that you can afford this mortgage long term. So that's adding 2 percentage points to the interest rate the bank is offering you, and knowing that you can manage those increases if they were to come. Now, that's not saying that they are going to happen, but that would have been really good advice for somebody taking out a loan last year at this time. They may not have thought, wow, interest rates could come up more than 400 basis points in just a short amount of time, but they did. And so for those people who prepared for it, at least they know they can manage those payments and not be stuck with wondering how they're going to make those mortgage payments going forward.
Okay, what advice would you give to people who may need to borrow money to help pay for a potential rate hike?
Yeah, this is the situation that many people have found themselves in, is to borrow to pay down debt. So you're getting into debt to pay down debt, and it is a vicious cycle. The best advice I have is make sure that the money that you are borrowing is at a lower interest rate than the money that you are paying off. Otherwise, you're just getting yourself into more and more debt that is costing you more in payments. If you have, for example, debt on your credit card, that is the highest interest rate you are going to pay, for most of us, on money that we have borrowed. Now, that isn't impacted by the Bank of Canada's interest rate announcements, but definitely it can make it more difficult to make mortgage payments. So consolidating that debt into a lower interest rate product, paying that off, is going to help you free up some monthly cash flow, which is the issue that many Canadians find themselves in, is that at the end of the month, they have no extra money to do anything, buy groceries, go on a holiday, go out for dinner, do something for their kids. That is the issue, is that there really is a paycheck to paycheck kind of situation happening in many Canadian homes. So if you need to borrow, just make sure that the interest rate that you are borrowing at is lower than the loan that you are paying off.
Some good advice, especially as we anticipate, again, an interest rate hike this week by the Bank of Canada. Personal finance expert Rubina Ahmed joining us. Thanks so much for this, Rubina.
Yeah, thanks so much for having me.